In this video, I'm going to explain what a promissory note really is and reveal 4 powerful ways you can use a simple document to build wealth, protect your investments, and create income streams that most people never even consider. If you've ever lent money to someone, borrowed from family or friends, or want to understand how the wealthy use promissory notes to structure deals and generate passive income, this could change everything about how you think about lending and borrowing. I'm Santiago Cueto, board-certified international business law expert and best-selling author, and I've structured countless promissory note transactions that help my clients build wealth while protecting their interest. And today, I'm going to break down this powerful financial tool and show you exactly how you can use it to your advantage. Let me start with a story that shows why understanding promissory notes matters so much. Just a few years ago, I had a client in Miami who wanted to help his daughter buy her first home, but he didn't want to just give her money as a gift. Instead, we structured a promissory note where he lent her $200,000 at a 3% interest rate, far below market rates, but still creating a formal loan structure. This simple document accomplished 3 things. It avoided gift tax issues, created a legal framework for repayment, and actually helped his daughter build credit history. That's the power of understanding how promissory notes work. All right, so what exactly is a promissory note? At its core, a promissory note is a written promise to pay back money that's been borrowed. Think of it as a formal IOU that creates a legal obligation between a borrower and a lender. Unlike a simple handshake agreement, a promissory note spells out exactly how much money is owed, when it needs to be paid back, and what interest rates apply, and what happens if the borrower doesn't pay. You've actually encountered promissory notes many times in your life, probably without even realizing it. When you take out a mortgage, a car loan, student loan, you're signing a promissory note. That's what it is. The difference is that most people only think of promissory notes in the context of bank lending, but they're incredibly powerful tools for private lending between individuals, businesses, and investors. Understanding the different types of promissory notes is crucial because each serves different purposes and offers different levels of protection. Now, the 2 main categories are secured and unsecured notes. A secured promissory note is backed by collateral, meaning if the borrower doesn't pay, the lender can take possession of specific assets to satisfy the debt. This might be real estate, a vehicle, business equipment, or any other valuable property. An unsecured promissory note has no collateral backing it up. Now, if the borrower defaults, the lender's only recourse is typically to sue for the money owed. Now, beyond secured versus unsecured, promissory notes fall into several categories based on their purpose. Personal promissory notes are typically used between family members or friends for things like helping with the house down payment, funding education, or covering emergency expenses. Commercial promissory notes are used in business transactions, often for equipment purchases, business expansion, or working capital. Investment promissory notes are sophisticated instruments used when investors loan money to businesses, sometimes with the potential for equity participation. Real estate promissory notes are specifically used for property transactions, often in owner financing situations. Now, let me show you 4 specific ways you can use promissory notes to build wealth and create financial opportunities. The first way is private lending for higher returns than traditional investments. Instead of putting your money in a savings account, earning less than 1%, or even stock market investments with unpredictable returns, you can become a private lender and earn consistent interest income. Let's say you have $50,000 sitting in a savings account. You can lend that money to a credit-worthy borrower at 8 to 12% interest, secured by real estate or other valuable collateral. This creates a predictable income stream that often outperforms traditional investments while being backed by tangible assets. Now, the beauty of private lending through promissory notes is that you control the terms. You decide the interest rate, payment schedule, and collateral requirements. You're not at the mercy of stock market volatility or bank interest rate policies. This strategy works particularly well for retirees or anyone seeking steady income from their capital. Now, the second way to use promissory notes is for real estate transactions, particularly for owner financing. This is where promissory notes become incredibly powerful for both the buyer and the seller. As the seller, Offering owner financing through a promissory note can help you sell properties faster, often at higher prices, while creating a long-term income stream. You essentially become the bank, collecting monthly payments with interest instead of receiving a lump sum at closing. Here's a perfect Florida example of that. A property owner in Tampa had a rental property worth $2 million that wasn't selling quickly in a competitive market. Now, instead of continuing to wait for a traditional buyer, he offered owner financing through a promissory note. He found a buyer who put down $400,000 and signed a promissory note for the remaining $1.6 million at 6% interest over 20 years. The seller now receives over $11,400 monthly in principal and interest payments, creating a substantial income stream while transferring the property management responsibilities to the buyer. Now, as a buyer, promissory notes and owner financing can help you acquire property when traditional financing isn't available or when you want more flexible terms. This is particularly valuable for investors who want to move quickly on deals or buyers who might not qualify for conventional mortgages. Now, if you're finding this information valuable and want to learn more about wealth building strategies like this, make sure to hit that like button and subscribe to my channel. I share these kinds of advanced financial and legal strategies every week that most people never hear about. And I don't want you to miss out on techniques that could transform your financial future. Now, the third way to use promissory notes is for business funding and investment opportunities. Many successful businesses get started or expanded using promissory notes rather than traditional bank loans or giving up equity to investors. This strategy allows business owners to access capital while maintaining control of their companies. For example, if you're an investor, you can use promissory notes to fund promising businesses in exchange for attractive interest rates and potentially some equity participation. This gives you exposure to business growth while having the security of a formal debt instrument. The business gets the capital it needs without immediately giving up ownership, and you get the potential for returns that significantly exceed traditional investments. Now, here's another Florida example that shows this perfectly. A successful restaurant owner in Miami wanted to open a second location, but didn't want to give up equity to investors or deal with the restrictive bank loan requirements. Instead, he raised money from private investors using promissory notes. Each investor received a note paying 10% annual interest, secured by the restaurant equipment and inventory. The business owner maintained full control of his expansion, while the investors earned attractive returns backed by tangible business assets. Now, the fourth way to use promissory notes is for family wealth transfer and estate planning strategies. This is where promissory notes become incredibly sophisticated tools for building generational wealth. Instead of giving money outright to children or family members, which can trigger gift tax issues and doesn't teach financial responsibility, you can structure loans through promissory notes. These family loans can be made at below market interest rates, which still provides a benefit to the borrower while avoiding gift tax complications. The interest payments create income for the lender, and the formal structure helps establish creditworthiness for the borrower. When structured properly, these arrangements can also provide significant estate planning benefits by freezing the value of assets for estate tax purposes while allowing future appreciation to benefit the next generation. The key to successfully using promissory notes is understanding the legal requirements and structuring them properly. In Florida, promissory notes must include several essential elements: clear identification of both parties, the exact amount borrowed, repayment terms, including interest rates and payment schedules, and signatures of all parties involved. Florida law also requires lenders to pay a documentary stamp tax of 35 cents for every $100 loaned, capped at $2,540 for unsecured notes. Interest rate limits are also important to understand. For loans under $500,000, Florida caps interest rates at 18% per year to prevent predatory lending practices. While notarization isn't required, it's strongly recommended for larger amounts to ensure enforceability. Now, the beauty of promissory notes lies in their flexibility and the control that they give you over your financial relationships. Whether you're looking to generate income from your capital, structure creative real estate deals, fund business opportunities, or manage family financial relationships, promissory notes provide a framework that protects everyone involved while creating opportunities for wealth building. understanding how to properly structure and use promissory notes can literally transform your approach to lending, borrowing, and investing. They provide opportunities for higher returns rather than traditional investments, creative financial solutions for real estate, flexible business funding options, and sophisticated estate planning strategies that most people never consider. Now, if you found this breakdown valuable and want to learn more strategies for building and protecting wealth through legal structures and financial instruments, make sure to like this video and subscribe to my channel. I regularly share insights on business law, investment strategies, and wealth building techniques that can help you take control of our financial future and create opportunities that go far beyond traditional investment approaches. I'll see you in the next one.